The cost of living has been one of the big issues facing families around the country for a long time. We've just had the latest inflation data through. Let me just show you what they point you towards. Now, this is showing you the rate at which prices are changing each year. You can see the cost of living crisis. They're going up into double-digit territory. More recently, it's gone down to close to 2%, so it's actually a little bit below 2% in September. That's just jumped up, so we've seen that jump up to 2.3% in October, raising the question, actually that's a little bit higher than most economists had expected. What was pushing it up? It was mostly, if you look at the contributions, so all of the different parts contributing to this higher inflation, it was mostly housing, services, including energy, primarily energy that was pushing up inflation. Worth saying as well, we didn't just have this data, we had other data as well on, for instance, house price inflation. It's a different measure of inflation, but still very important for many people. You can see it was pretty high a few years ago, but it recently dropped into negative territory. Now it's just over 3% there, house price inflation. But here's what's critical. Look at the difference between house price inflation and rental inflation. So that's rents. They are rising at an annual rate of over 8%. So if you're renting, you're seeing your costs go up significantly higher than indeed those house prices are going up right now. But put all of that together, and a lot of people are looking at what this means for the Bank of England. So the Bank of England obviously decides on interest rates. Right now, those interest rates are up at 4.75%. Not long ago, because we've always got people out there in the market trying to kind of guess where those rates are going to go soon, not long ago, investors thought that by next year, so in mid-September, they thought by next year, this could be down to 3.5%. But that shifted quite a lot, OK? And it shifted actually mostly as a result of the budget. So after the budget, those expectations went higher, up to above 4% next summer. The main thing that's shifted now is that's gone up a little bit higher, but people think interest rates aren't going down as quickly. As I say, the budget is the main explanation for that. And when it comes to the budget, one last chart to update. This is showing you how those government borrowing costs, so how much the government is being charged for borrowing versus the US, versus Germany. It's showing how they evolved after the budget compared with other previous budgets. That kind of blue area is other previous budgets. You can see cost of borrowing went up significantly, although critically, nowhere near as much of a roller coaster as we saw after Liz Truss's mini-budget.